Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Wednesday, the 1st of November. Not a great start to the month. We've been blocked by former September support 73.70 and an end-of-day close back below 7300, which is the recent support area, could lead us to roll over down to the floor of that falling February price channel, now pointing as low as 71.40. On the upside, an end-of-day close back above 73.70 takes us back to late October resistance around 74.30, but at the moment that's the best we are looking for. The 200-day line falling, the 50-day line rising, but the 200-day line there, the dominant feature. RSI at 35, which also leaves scope for a push for the RSI down to 30 or below, which would obviously give it the oversold type of vibe. Moving on to the DAX, and here you can see that we are still trying to consolidate at the lower levels. The gap down that we had in the middle of last month has not been filled, and while we're below that, we have the risk not only of a retest of recent support around 14,600, but also a move down to that red April support line projection as low as 14,400 sometime early this month. We've had a double bounce for the RSI off the oversold area, but no real pickup in the price, which is a negative as well. Moving on to the Dow, and the picture here reflecting the rather grim look that we had with the other markets. The only positive that we have at the moment is that the Dow's managed to close above the initial October support there, 32,800, to end the month, and then while we're above that, then there's a chance of a move back up to the 200-day line, 33,800, but that would be something by divergence between this market and what we've seen at the DAX and the FTSE. Bullish divergence there as well in terms of the lower low for October below 32,500, but a higher RSI trace, so that does give bulls some better hope on this market than maybe the FTSE or the DAX. Moving along to Bitcoin, and here you can see that we've got the market consolidating in a very tight triangle. It looks like a mid-move consolidation before a new leg to the upside. What we're expecting or hoping for is that we will break through 35,000 and head up to that resistance line projection from November last year as high as 43,000. And that could happen by the end of this month. The reason for the relative optimism is that we gapped higher mid-October, and we've held above the old October resistance, 32,100, ever since, which is a strong signal. Moving on to the stocks, and starting off with Andrada, which has been a rather soft market in recent weeks, especially since that September bull trap through 7 3/4. Just the first hint that we've got a turnaround here, so there's bullish divergence with a lower low at the end of last month, but higher RSI trace, and that could also mark the floor of a rising trend channel that we've had since July last year. Obviously at the top of the channel there, heading towards 9p plus, but at least initially hoping that the shares will be able to rally back to the old October support around 6p, and above that then we're looking for the 50-day line near 6.6p. On to Barron Oil, which I haven't looked at for a while now. Let's see if we can get anything positive here. We've got a broadening triangle base in place since June. We've broken a line of resistance there from the beginning of August, and the 50-day line at 0.08p, and above that 50-day line looking for 0.14 as soon as the end of this month. Nice RSI profile as well, so an uptrend line in the RSI window suggesting bullish divergence with the lower October lows that we had in the price window. Moving along to a stock which is has been one of the better stocks of the summer, and it's Beacon Energy. Here you can see that we've got a rising trend channel here, that floor of that channel around 0.15, looking for the shares to break through the 50-day moving average at 0.17. If we can do that, then it could be a move down up to the old September resistance around 0.27 by the end of next month, by the end of the year. On to Chaarat. Here we've got a situation where we've had an island reversal, bear trap island reversal, so we gapped down back in September and gapped up rather to start November above the floor of the gap now at around the 4p level, looking for at least 6p over the next few weeks. Best case scenario would be up to the 200-day line at 8.5p by the end of this month. The reason for the optimism is that bear trap island reversal and the bullish divergence that went ahead of the gap higher that we've had today. I know the Destiny Farmer has a few fans, so let's try and cheer them up with a review of the charting situation here. Here we've got a rising trend channel in place since March for the channel at 50p. Above 50p, we're looking for 70 pence, hopefully by the end of this month. And the way things are going, that should be a bit sooner than that, especially given that we had that golden cross at the beginning of September. Stock of interest at the moment is a potential recovery situation is Empyrean. And here we've broken out of that falling wedge that basically was keeping the shares down until the end of last month. 0.7, the key breakout level, and above 0.7, looking for up to 1.15 by the end of next month. More time we spend above the 50-day line now at 0.81, the better for that situation. Moving on to Hydrogen Utopia, which had a nice bounce yesterday, which we now know was because of director buying. We hit that line there, the July resistance line target. That was around 7.25 pence. Above that line, which is around that 7.4 pence level now, we're looking for up to 12 pence by the end of this month. I'd like to see the shares spend as much time as possible at 6 pence or above, which was the initial October resistance, and we're back by an uptrend line in the RSI window. Moving on to Harland and Wolff, which has been progressing of late. Now managed to break through the 200-day line around 14.25 pence. Above that, we're looking for 20 pence by the end of this month after the bear trap gap reversal that we had last month. Kodal looking good as well at the moment. We wanted the shares to break 0.65, and they've gapped through that line. They've obviously seen that line, the June line there, at 0.65. Above that, we're looking for 0.9 or even a bit more by the end of this month, maybe up to 0.95 to take out that old April resistance. 50 and 200-day lines rising very quickly. Next situation is Kromek, and here you can see that another stock which has benefited from the gap to the upside, which we spotted, bear trap gap reversal, and another gap to start the week. That means that above the initial target here around 5.9 pence, we're looking for up to 7.6 pence by the end of this month, and bullish divergence coming in there as well. So it's been a textbook charting turnaround. Optibiotix, another textbook charting turnaround, and here you can see why. We had unfilled gap to the upside around the 23rd of October, and we've held that. I just want to see the shares get stable above the 33 pence level, which was the old August peak. If they can do that sometime this week, then we're looking for 45 pence by the end of this month, which I think will cheer people up a lot. Moving on to URA Holdings. Here you can see that shares have bounced off the floor with that rising trend channel from basically this time last year. The level in question around 2 pence, and you can see that 2 pence has been in play as support for the stock over the recent past. Just want to see maybe an end-of-day close above the 200-day moving average at 2.3 pence to then finally see the stock head up to the top of that rising trend channel from this time last year as high as 3.25 pence. On to the last two. First one is Upland, where the bears might be still looking for a move towards the 2 pence area, 1.75, which was our worst case scenario for the shares. In fact, so far they've done a little better maybe than one might have expected after the news. But there is a line of support here around 2.25 pence. Below that, 1.75, the worst that we're looking for. Otherwise, the target on the way up would be to head to around 3.25 pence and the top of that gap from last week. Finishing off with Valirx, where we've been championing the technical look here. We had a bounce off the bear trap rebound off the now rising 200-day moving average. That was around 8.75 pence, and now we're looking for, finally, the shares to head up towards 18 pence on the top of that broadening triangle from back in December last year. That's it from me today. More updates tomorrow.